Good day everyone. We're now going to discuss the part 2 of the shareholders' equity. Our learning objectives to this chapter is account for distribution to owners and account for recapitalization and quasi-reorganization. Retained earnings. Retained earnings represent the cumulative profits, net of losses, distribution to the owners, and other adjustments which are retained in a business and not yet distributed to the shareholders. So, yung retained earnings ay yung iniipon na profit para ma-distribute siya sa shareholders pero sa future pa pwede ma-distribute. Retained earnings has two portions. First, the unappropriated or the unrestricted. This portion of retained earnings that is available for future distribution to the shareholders. Next portion is the appropriated or the restricted. This portion of retained earnings that is not available for future distribution to the shareholders. Appropriations are disclosed in the notes. In the absence of such disclosure, the retained earnings are deemed unrestricted. So pag hindi naman siya restricted, it will be considered as unrestricted. Appropriation may be a result of legal requirement, contractual requirement, and voluntary. First entry, debited ang retained earnings unrestricted and credited ang retained earnings appropriated. This is to record the appropriation. Next, retained earnings appropriated naman ang debited and retained earnings unrestricted naman ang credited. This is to record the restriction. Additional notes, appropriations do not affect shareholders' equity or total retained earnings, and appropriations do not mean that a corresponding cash fund has been set aside. Negative balance in equity. Yung parenthesis dito, nire-represent niya yung negative balance. So, sa retained earnings, again, it has a normal credit balance. So, if it has negative balance, it is debited. Hence, there is a deficit. And for the negative balance of total shareholders' equity, it is called capital deficiency. Let us now proceed to the dividend. Dividends can be in a form of cash dividends, property dividends, and share dividends. Cash dividends is the distribution in the form of cash. Under ng cash dividends ay yung liability dividends, which means ito yung mga dividends na inisyu ng corporation na may temporary cash shortage. A liability dividends may be a scrip dividend and bond dividend. Next, property dividends is in the form of non-cash, while the share dividend is in the form of entity's own share. For the declaration of dividends, it is normally declared out of unrestricted earnings in accordance to trust fund doctrine. However, if it is undergoing liquidation, it is permitted to declare out of capital in accordance to wasting asset doctrine, and it is called a liquidating dividends. Dates relevant to the accounting for dividends. First, the date of declaration. The date when the board of directors formally announces the distribution of dividends. Date of record. The date on which the stock and transfer book of the corporation is closed for registration. Only those who are listed as of this date will be entitled to receive dividends. Date of distribution. This is the date when the dividends are distributed to the shareholders. Liability for dividends incurs when the corporation declares them. So, pag nag-declare ang corporation, magkakaroon na sila ng obligation to pay. It is recognized naman if it is appropriately authorized by means. Dapat approve siya by a relevant authority only if the approval is required. Otherwise, nare-recognize na siya agad kapag dineclare na. Additional note, liability is recognized only for cash dividends or property dividends. Share dividends is presented in equity. Accounting for cash dividends. Cash dividends ay ang pinaka-common na form of distribution among the dividends. So for the accounting for cash dividends, only the outstanding shares are entitled to dividends. Para malaman natin yung total cash dividends, alamin muna natin yung formula ng outstanding shares. So, ang formula ay issued share plus share subscribed minus treasury share equals to outstanding share. Let's have an example. We have 100 peso par and 120 peso cost. Ang issued share natin ay 800,000, share subscribed 220,000, and treasury share of 144,000. Following the formula, we have an outstanding share of 876,000. So, ayan, tama na ba yung ginawa natin? The answer is no. Why? Because para malaman natin yung outstanding share, kailangan alamin muna natin yung outstanding balances ng tatlo. And how do we compute? Yung issued share and yung share subscribed will be divided to the par value, which is 100 peso. while the treasury share will be divided to the cost of 120 to find its outstanding balance. Then yun na yung amount sa gagamitin nyo to compute for outstanding shares. So to compute for the total cash dividends, i-multiply natin ang outstanding share balance. So to compute for the total cash dividends, i-multiply natin ang outstanding balance sa dividends per share. In our illustration, issued share 800,000, i-divide natin siya sa 100 peso par, we have 8,000. And share subscribe, same, i-divide sa 100 peso par, we have 2,200. And our treasury share naman, i-divide siya sa 120 peso na cost. And the answer is 1,200. Then, follow the formula, we will have a 9,000 outstanding shares. The 9,000 outstanding shares will be divided to 50 peso dividend per share. And our total cash dividends will be 450,000. Journal entry for the cash dividends. Take note of the dates kasi magkakaiba sila ng journal entry. Like for the date of declaration, debited ang retained earnings and credited cash dividends payable pa lang. Kasi at the date of distribution, dun pa lang tayo magkikredit ng cash, then debit na ang cash dividends payable to cancel out. Sa date of record, wala siyang entry kahit saang dividends. And additional note, sa retained earnings, pwede siya gawing dividends account if it is declared more than once within a year. Next will be the scrip dividends. Remember, under siya ng cash dividends but with temporary cash shortage, and it may or may not bear an interest, but in this illustration, may 10% interest rate siya per annum. So same lang siya, nahahanapin lang yung outstanding share, but magkakaroon tayo ng additional na computation. The outstanding share will be multiplied to the par value. The answer would now be multiplied to the dividends as percentage of par value to find the total scrip dividends. So, to number 8, di ba ang outstanding share natin kanina ay 9,000. I-multiply natin ito sa par value na 100 peso, which we will have 900,000. Ayun yung par value of outstanding share. Then, i-multiply natin siya sa 50%, which represents the dividends as percentage of par value, and we will get a total scrip dividends of 450,000. For the journal entry, same journal as the cash dividends sa date of declaration, pero ibang account ang nakadebit since ibang dividends ang kinumpute natin. Nagkaiba lang sa date of distribution, which is may interest expense na nakadebit. Let us now move on to the accounting for property dividends. It involves two parts: accounting for the liability or property dividends payable. Second, accounting for the non-cash asset declared as property dividend. Property dividends payable is accounted for as follows: A. Initially measured at the fair value of the non-cash assets at the date of declaration. B. Subsequently measured at fair value at the end of each reporting period and also on the settlement date. Changes in fair value are recognized directly in retained earnings. On settlement date, any difference between the property dividends payable and the carrying amount of the non-cash asset is recognized as gain or loss in profit or loss. Accounting for the non-cash asset declared as property dividends. We have the non-current asset and the current asset. For the non-current asset, it is accounted for under PFRS 5, provided a non-cash asset is available for immediate distribution in its present condition and the distribution is highly probable. Under PFRS 5, the non-cash asset is first, non-current asset held for distribution to owners. Second, initial and subsequent measurement of carrying amount and fair value less cost to distribute, whichever is lower. And third, not depreciated anymore. Let's go back to the initial and subsequent measurement of carrying amount and fair value less cost. Changes in fair value are recognized as gains or losses in profit or loss. A loss is recognized if the fair value less cost to distribute is below the carrying amount. A subsequent increase in fair value less cost to distribute is recognized as a gain but only to the extent of the cumulative losses recognized in previous periods. Choice between property and cash dividends. If shareholders are given a choice of receiving either property dividends or cash dividends, the dividends payable is estimated by considering both the fair value of each alternative and the associated probability of shareholders selecting each alternative. Accounting for share dividends. Share dividends are accounted for as follows. If the share dividends declared are considered small, meaning less than 20% of the outstanding share, the share dividends are accounted for at fair value. Retained earnings is debited for the fair value of the share dividends on declaration date. The difference between the fair value and par value is credited to the share premium. If the share dividends declared are considered large, meaning 20% or more of the outstanding shares, the shares are accounted for at par value. Retained earnings is debited for the par value of the share dividends. Accordingly, no share premium arises. Treasury shares declared as dividends. When treasury shares are declared as dividends, the cost method is used instead of the accounting procedures for small and large share dividends. This is because the declaration of the share dividends in the form of treasury shares usually does not lower the market price of the shares. Retained earnings is debited for the cost of the treasury shares declared and no share premium arises. We have here an illustration. On April 1, 20x1, an entity has 9,000 with 100 peso par outstanding shares and 1,200 treasury shares previously acquired at 120 per share. On this date, the entity declared share dividends of 1 treasury share for every 10 shares held to shareholders of record as of April 15, 20x1 for distribution on May 1, 20x1. The fair value per share on declaration date is 140. For the journal entry on the date of declaration, retained earnings is debited and stock dividends payable is credited of 108,000. On the date of record, there will be no entry. On the date of distribution, stock dividends payable is debited and treasury shares are credited at the amount of 108,000. On the same day, May 1, 20x1, retained earnings appropriated is debited and retained earnings unrestricted is credited to the amount of 108,000.
So we'll head on fractional shares. Fractional shares. It is sometimes impossible to issue full shares to all shareholders when share dividends are declared. So there are two ways to deal with the fractional shares. Corporation may issue fractional shares rights and give the holders thereof an ample of time or grace period to accumulate sufficient warrants for a full share. A market may develop for the share rights wherein holders may buy or sell fractional shares rights to enable buyers to accumulate sufficient share rights to acquire full share. And second, pay cash in lieu of fractional shares rights. So next is share dividends of different class. Corporate may sometimes declare share dividends that are different from the class of shares held by recipients. For example, preference shares are given to ordinary shares as share dividends. Share dividends of different class are accounted at fair value. Choice between share and cash dividends. When shareholders are given a choice of receiving cash in lieu of shared dividends, a compound instrument is originated. First is financial liability for the cash alternative, and second is an equity instrument for the shares to be issued. The entity estimates the dividends payable by considering both the fair value of each alternative and the associated probability of shareholders selecting each alternative. The entity then applies the accounting procedures for cash dividends and share dividends separately to each of those alternatives. So, we'll head on preference shares. Preference shares have one or both of the following preference over ordinary shares. 1. Preference in the distribution of asset in case of corporate liquidation. And second is preference in the distribution of dividend. Preference over asset. Preference shareholders are paid first and before anything is paid to the ordinary shareholders in case of corporate liquidation. And preference shares that are preferred to asset usually have liquidation value. Liquidation value is an amount more than the par value that the preference shareholders are entitled to receive in case of corporate liquidation. Preference over dividends. Preferred as to dividends means that preference shareholders are paid first before ordinary shareholders when dividends are declared. Preference over dividends may be non-cumulative, cumulative, non-participating, and participating. Non-cumulative. A non-cumulative preference share is one which the dividends entitled for a year and it is forfeited when dividends are not declared in that year. A cumulative preference share is one which the dividend entitlement accumulate for each year until paid, and it is disclosed as dividends in arrears but not accrued as liability unless the dividends are declared. Non-participating. A non-participating preference share is one which is entitled to a fixed amount of dividends, and participating preference share is one which entitled to the amount in excess of the fixed amount of dividends. The amount of participation is computed after both the preference and ordinary shares are allocated their basic dividend. The basic dividends of cumulative preference share includes dividends in arrears. The basic dividends of non-cumulative preference share includes the only current year dividend entitlement. Basic dividend of ordinary shareholder is equals to aggregated par value of the outstanding ordinary shares multiplied by the preference rate. If there is more than one class of preference share with different preference rates, the lowest preference rate is used to compute for the basic dividends of ordinary shareholders. Any excess of the dividends declared after deducting the basic dividends is the amount subject to participation, which is allocated depending on the nature of participation of the preference shares. Participating preference share may be either fully participating or partially participating. Fully participating is participates on a pro rata basis, while partially participating participates only up to a certain amount or percentage. Preference share may have more than one dividend preference. For example, preference share may be both cumulative and participating, or non-cumulative and non-participating.
Dividends recognized as expense. Redeemable preference shares are classified as financial liabilities. Gaya ng sabi kanina sa Part 1, it is classified as financial liability kasi kapag si holder ginamit niya na yung right niya to redeem, yung issuer is mandatorily obligated na bayaran yung redemption price. Accordingly, dividends declared on redeemable preference shares are recognized as interest expense and reported in profit or loss. Liquidating dividends. Ito yung mga dividends na dinideclare kapag ang corporation is out of capital na rather than from retained earnings. Normally, dinideclare ito upon corporate liquidation or kapag ang corporation is magliliquidate na due to bankruptcy. However, the wasting asset doctrine permits wasting asset corporations or mining companies to declare dividends out of capital during their existence. Meron tayong instances na nagkakaroon ng unintentional liquidating dividends. Illustration. An entity declares 1 million cash dividends, 80% of which are liquidating dividends. Journal entries. Sa date of declaration, ang entry ay debit capital liquidated, which is 1 million multiplied by 80%, that will give us 800,000. Kasama sa debit side ay yung retained earnings na 1 million multiplied by 20% na 200,000. Sa credit side naman is cash dividends payable na 1 million. Sa date of record, wala tayong ilalagay na entry. Sa date of distribution naman, ang entry natin is debit cash dividends payable na 1 million at credit cash na 1 million. Kino-consider na liquidating dividends ang mga dividends na dineklara na sobra sa balance of unrestricted retained earnings. Liquidating dividends are charged to the capital liquidated account, which is a contra equity account na binabawas sa kabuoang shareholders equity. Disclosure of dividends. Dito naman tinutukoy na it's either sa statement of changes in equity or sa notes na didisclose ang mga dineklarang dividends. Events after the reporting period. Dividends declared after the reporting period but before a financial statements are authorized for issue. Ito yung mga around January to March are not recognized as a liability at the end of the reporting period kasi wala pa namang obligation na nag-e-exist that time. Dinidisclose lang to sa note at hindi sa statement of changes in equity. Recapitalization. Ito yung mga nabago sa capital structure ng corporation. Mag-i-issue sila ng new shares dahil sa pagwawalang bisa ng mga naunang na-issue na magiging kapalit nito. Recapitalization is accomplished through any of the following. Una, changes from par to no par or vice versa. Pangalawa, reduction of par value or stated value. Pangatlo, is yung share splits or reverse splits. But take note na walang effect ang recapitalization sa assets, liabilities, o pati sa total shareholders' equity. May dalawa tayong form ng share split. Una, split up or share split. Yung pangalawa naman is split down or reverse share split. Sa split up, nangyayari lang to kapag binabaan yung par value per share para mas maging affordable ito sa mga future and potential investors. Yung pangalawa naman na split down is kabaligtaran ng split up. Yung old shares ay cancelled at papalitan ng mas mababang bilang ng new shares pero mas mataas yung presyo or per value per share. Quasi-reorganization. Nangyayari ito kapag yung corporation ay financially troubled o malapit na malugi. Masasabi natin na hindi magandang katayuan nila sa ngayon, pero para makapag-umpisa ulit or fresh start, hindi required pero pinapayagan sila na i-adjust o re-evaluate lahat ng assets and liabilities nila mula sa original to much lower price. Pwede magkaroon ng quasi-reorganization through una, revaluation of property, plant, and equipment, and or recapitalization. Ito naman yung mga basic approach sa quasi-reorganization. Una, assets and liabilities are revalued upwards or downwards. Pangalawa, any resulting credit balance in revaluation surplus is used to wipe out with any deficit. Pangatlo, kapag nagkaroon ng recapitalization, any resulting share premium is also used to wipe out any deficit. Maraming binigay na guidelines for quasi-reorganization ng SEC na iisa-isahin natin. Una, ang mga pinapayagan lang na mag-undergo sa quasi-reorganization ay yung mga company na nasa financial distress or talagang palugi na. Pangalawa naman, ang gagamitin na pang-absorb sa mga naipong lugi ng kumpanya o yung mga deficits is yung any revaluation surplus from fixed asset as appraised by a reputable licensed appraiser. Yung mga revaluation surplus na pinapayagan lang sa plan ay may limitation. Ito yung mga real properties, permanently installed fixed assets, other machineries and equipments directly needed, at yung mga talagang ginagamit lang sa operasyon ng kumpanya. Hindi sinasama sa purposes of quasi-reorganization ang mga revaluation surplus on fixed assets undergoing repair or will require repair before the same can be put into productive use. Panglima, dapat yung kumpanya ay mag-present ng project study sa mga gagawing operasyon nito in the future para masuportahan ito sa quasi-reorganization. Lahat naman yung mga natitirang revaluation surplus o yung mga sobra pagkatapos ng quasi-reorganization ay hindi dapat gamitin para ma-absorb yung mga malulugi in the future without prior approval of the commission. Dapat may approval ng commission. Para naman sa purpose ng dividend declaration, yung mga retained earnings ng company ay dapat restricted to the extent of the deficit wipeout of the revaluation surplus. Any subsequent piecemeal transfer of revaluation surplus to retained earnings shall not be used for dividend declaration. At panghuli, dapat i-disclose sa financial statement ng company yung purpose and effect of quasi-reorganization on its financial condition for a minimum of period of 3 years. Yung 3 years is minimum na.